A new report says the chances of recession are within the next 12 months. Get this, 100%. You rarely hear that.
Moynihan's take on the economy is that a recession is coming.
So a recession might be on us, but as far as investing is concerned, there are really two options that you can go. You can curl up in a ball and just start sucking your thumb and wait till everything is great and peachy again, or you can do what the big boys do. And the big boys know this is time to make some money, baby. And one of the goats of investing, Warren Buffett, said it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And after every single recession, the stock market has always rebounded in a very big way. We are 540% higher than we were at the bottom of the 2008 crisis. And all of 2022, we saw a pretty big downtrend. So it makes you think that we might be on the path to recovery. So in this video, I'm gonna go over my favorite stocks that I think I might be investing in as we head into a recession. Although this is only my opinion and I am no financial advisor, I am merely sharing what I think might be a good opportunity. In this video, you'll hear some stocks you've heard of and you'll hear some stocks you may never have heard of. I do wanna set some parameters though. These are primarily gonna be growth stocks. So the majority of the portfolio is still going to be VTI and VOO, the big market indexes. The stocks on this list can't be too small to where they probably won't exist in a couple years, okay? They want to be companies that are going to stick around, okay? And stocks must be listed on the major exchanges, so you can't have any of the OTC markets, only big stocks. These are going to be in no particular order, okay? Doesn't matter the first one or the last one. You kind of evaluate for yourself what's more important. So the first one we're starting off with could be the most hated, but it's gonna be Tesla. So the major reason I love Tesla is their margins are just ridiculous, okay? So I could say stuff about how Tesla is gonna be the best because they're good charging network or that Tesla is more than a car company and they make electric stuff, but I'm not gonna say that. Their margins are a reason why this brand will be around for a long time. Depending on the source that you go to, Tesla makes between $10,000 and $15,000 per vehicle. I just want you to compare this to other companies, okay? The legacy automakers like Toyota and Honda, Toyota makes $2,500 per vehicle and Honda just has a 5% margin. So let's say they sell a car for over $35,000, they're gonna make about $2,000 per vehicle. Tell me in a world how you can compete with Tesla if Tesla's making $10K per vehicle and the legacy automakers are only making $2,000 per vehicle. Now we got to move on to the EV sector. So Ford is actually expected to lose $3 billion on their electric vehicles. Chevy is also losing the money on their electric vehicles, and Rivian, which they do make some pretty good cars, they're actually losing $140,000 per vehicle. So in my opinion, this puts Tesla in a huge power spot. With all this extra money, they can do two things. They can take their high profits and keep building a brand and expanding to new regions, offering more cars and offering more services. Or here's the other take, which I personally think they're gonna go with. They're gonna start taking over market share. And we've already seen this. They started dropping their prices because they can afford to since they have huge margins. So this is gonna take away cars from Ford, Honda, Hyundai, you name it. So I think they're gonna continue to drop prices, take away from their margin, but acquire more and more customers and eventually become a big volume model. So as customers leave other companies, they will come to Tesla and they might become lifelong Tesla customers. But now moving on to the next stock that probably have once again heard of is Apple. So we all know who Apple is. They probably make your phone, but they are the largest publicly traded company in the world. Now, it's fair to say that the tech sector had a pretty rough 2022. They had recession fears, interest rates. It smoked the sector, okay? The sector went down quite a bit. This made for a 26% pullback in Apple in 2022. So a nice pullback, but this was short-lived and it shot right back up. Personally, I don't like buying stocks at all-time highs. It feels like there's no meat left on the bone. It doesn't feel like it can keep going up, and you're most likely gonna buy at all-time highs and write it down. So keep that little caveat with Apple. But right now, overall, I like everything about Apple. I just wish there's a little bit more to give as far as stock price. But reasons I like them, first, they offer a great dividend. They started paying a dividend in 2012, and over the past 10 years, they've actually kept increasing it. Now the payout is around 9 cents per share. Now, personally, I don't buy stocks for dividends, but if the stock is already gonna go up, I will happily take that dividend as well. So in this case, it's more like icing on the cake than anything. So the next reason that I really like Apple is they have started making their own silicon. And what I mean by silicon is their own computer chips. They used to buy computer chips from Intel, but they recently cut that off, and now they make their own chips. So I think it could only be a matter of time before Apple might be producing chips on a mass scale because their chips are far superior to any other chips on the market currently. That brings us to another great reason, and this is why everyone loves the stock. Their margins are great. The iPhone costs around $501 to make, and well, they sell it for a ridiculous amount of $1,100, and people buy it all the time. This is a 120% profit margin, which is, a great reason to buy stock. 29 analysts gave Apple a strong buy rating, and the current price of Apple is at $166, and Apple analysts have price targets between $120 and $205, with an average target of $175 in 2023. And guess who else bought Apple? The legend Warren Buffett. Berkshire Hathaway recently added more shares to their portfolio, just showing us that Apple could be a strong buying opportunity. That brings us to ExxonMobil, or XOM. Exxon is one of the world's largest integrated oil companies with operations, exploration, production, refining, chemicals, you name it, they do it in the oil industry. But being a large energy producer, we have to know that things are starting to change with renewable energy. Companies are shifting to solar, wind, hydro. Governments are forcing companies to switch to these. And I want to point out that these oil companies represent some of the biggest companies in the world. And they're traditionally thought of as oil companies, but I want to make sure we're thinking of them differently, okay? They're huge companies, they're oil companies, but they're really energy companies. And these companies are so big, I think they're way too big to fail when people start moving away from oil. And ExxonMobil has recently signed a 12-year agreement with a Danish energy company to purchase wind and solar power in West Texas starting in 2022. Exxon has announced that it will invest $3 billion in lower emission solutions through 2025, including carbon capture, storage, hydrogen, and biofuels. To be honest, this isn't a political channel, and I'm not here to say if this is a good thing or a bad thing. I'm here to talk about business. But as business, I like it. It shows us that they're going to evolve. They won't just die with oil and use oil until their death. They're going to keep evolving and making sure they're on top of the energy sector. They also have $30 billion of cash on hand, so it wouldn't be hard for them to start making large green purchases going forward. And in my opinion, if everything starts getting shifted to solar and wind, a small startup is not going to be able to take over the energy sector. So it's going to be these big companies that will make that transition. And I think ExxonMobil is a great spot for that. And moving on to a similar solution is Enphase. They are a global energy company that specializes in solar solutions. Among analysts, 19 people have buy consensuses and recommendations with a price target of $284, which would mean a 29% upside for this year. The company also benefits from a strong demand in its product from the US residential market, which is expected to grow by about 19% in 2023. But what I really like is the industry they're in, solar, and their margins they have in the industry. I'm sorry, but you have to think that solar probably has a place moving forward. I mean, just thinking aside, it's green, but it's cool to be able to power your home off the grid, not just to help the environment. There are plenty of benefits that solar brings to the table, but then you pair that with a high profit operating margin, and now I get excited about the stock. I know this is a hard comparison to make, but Enphase's net profit margin was 21%. Now you compare that to Amazon, their net profit margin was 0.2%. And I know it's not fair to compare a startup company with a mega company, but it's an interesting analysis to make. It just shows how profitable Enphase can be. Now moving on to the next company is Intel. Intel is a technology company that makes computer chips for many different applications. In 2022, they have been taking a pretty big hit. They were recently dropped by Apple, like I mentioned earlier. They've had new competitive pressures, new management, all these things have been working against them. And it led to a 50% decline in the past couple of years. This decline, I think, is an opportunity. The stock is down, and that creates good buying opportunity. I mean, you can't make money when you're buying at all-time highs all the time. And I really think this could be a good deal because of the semiconductor shortage or the chip shortage that we've been seeing. And now I think they could start bouncing back. To me, it comes down to if you think Intel will be around for the next 10 years or not. And we know this industry is sticking around because chip demand is just going to keep going up when we keep adding new technology. So it's something to think about. I mean, they've lost market share to NVIDIA and AMD, but I'm going to think they're going to bounce back. And that's why I'm excited about them, because I think they're at a good deal right now. But along those same lines, we got to look at TSM, or Taiwan Semiconductor Manufacturing. They're a $500 billion business and a dominant player in the advanced chip market. They're a company that manufactures chips for other companies. TSM has a massive market share for chips under 7 nanometers, and under that is Apple. Apple started shifting away from Chinese chips, and they're starting to use TSM more. So they're one of the biggest TSM customers. TSM is yet again another holdings by Warren Buffett. So if we know anything about what he thinks, this could be a great move. I think with technology being introduced every day, like I said, more and more semiconductors are going to be needed. That's why I put TSM in my long-term growth list. Next up, one that has been slightly controversial, and I know this could take some heat, but it's Disney. Again, politics aside, we don't care about that, but investors have not been happy with the political direction of Disney. Basically, the problem is investors don't want politics to mix with Disney. And now Disney longtime CEO Bob Iger has just been brought back, and things are starting to feel different. To me, and what other people are saying, is it feels like Disney is starting to get back to the root of where they started, and they're giving the customers the best experience possible again. So the first reason I think they could be good is because of their management. When you're thinking about buying a stock and holding it for a long time, you have to look at the ship and who is steering the ship. If you like the captain, then you hop on board. Well, the new captain, Bob Iger, has been making some changes, and one of his first changes was he hiked the price of the Disney Plus membership, and that actually went really well. Under the first quarter he was there, revenue from the park shot up 21%. Now, if we look at the stock chart though, I think Disney looks like a great buy. It seems like shares are at least being accumulated at this 100 level, or at least the volume's increasing. So this means that it could either jump up or down, but I'm thinking we're gonna go back up. The chart looks good. New management seems to be heading in the right direction. So I think Disney is a good deal right now. So I think this could be some of the best options as we move forward and go into a recession. I really enjoy what these stocks are providing. Remember, a recession is a great opportunity. It can be scary, but it's also a good buying opportunity. And this is when you can build wealth. So I wanna know what you guys think of these stocks. Maybe list some other stocks below. Make sure there are no small cheapies that are going to go away. And I appreciate it. If you could like the video, that helps me out so much. And I will see you on the next one.